Is your bank paying you enough? Are you earning as much interest on your savings as you could be? If you're with a big-name traditional bank, the answer is probably no. And that's where a lot of people start looking into online banks like Ally. You've probably heard the buzz, online banks offer better interest rates. But is it true? And are Ally's interest rates really higher than what you'd get at a traditional brick-and-mortar bank? The short answer is yes, absolutely. Let's break down why. Traditional banks have huge overhead costs. They have to pay for all their physical branches, the staff, the utilities, the maintenance, you get the picture. This eats into their profits, and one of the ways they make up for it is by offering lower interest rates on your deposits. Ally, on the other hand, is an online-only bank. They don't have those physical branches, which means their operating costs are significantly lower. They pass those savings on to you in the form of higher interest rates. Let's look at the numbers. As of mid-2025, the national average for a savings account interest rate is around 0.57% APY. Meanwhile, Ally Bank's online savings account is offering a rate of 3.5% APY. That's a massive difference. You're earning more than 6 times the national average just by choosing an online bank. This isn't just a small bonus, it's a significant amount of money that compounds over time. But it's not just about savings accounts. Ally also offers competitive rates on their CDs and money market accounts. Their high-yield CDs have rates that are far above what you'd find at most traditional banks. So, while traditional banks might be familiar and convenient for in-person transactions, when it comes to growing your money, Ally and other online-only banks are in a different league. With that said, thanks for watching, and until next time.